Welcome back, everyone. Next up, we have GRYN Hygienic Holdings Inc. It trades on the OTCQB under the symbol GRYN and is an innovative technology-driven enterprise focused on the high-standard cultivation and processing of industrial hemp and manufacturing of pharmaceutical-grade bioactive cannabinoids. Please welcome its president and CEO, Ronald Loudoun. Welcome, Ron.
Hi, Anna. How are you?
Great. We're excited to hear your presentation today. The floor is yours.
Okay, thank you. Thanks for setting this up, and welcome everybody on the call. So I'd like to open with just kind of describing our business model, which is cultivation, processing, and sales and distribution, 3 levels of business. The cultivation and processing in this industry, it's a new industry, is fairly important. I liken that to legs on a table. For example, you've got a large company like Canopy, a conglomerate that has a banquet table, and they really don't control their supply chain, which means they don't control their product efficacy or their costs. So the opposite of that, our objective is to build a very good foundation. We have a lot of experience in cultivation, which is the foundation and should be the foundation for any company in this business. As this business becomes more and more competitive, which is the cannabis sector specific to hemp, it's going to become more increasingly competitive. For one, so if you don't, if you're not production managers, you won't control your costs. You won't be competitive. Right now, I think people are growing for probably $1.50 to $2 a gram, whereas we're down in the 63 to 65 cent range. So the foundation of our company is really cultivation. We've got a farm that's USDA organic certified, 824 acres with 400,000 square feet of greenhouse. We've just had that recently appraised at $28 million. We only owe $7.5 million on it. So we're building our balance sheet with that. We've got a further up to 10,000 acres contracted with farmers in the El Centro region through an acquisition of Primordia, the assets of Primordia, which was a group of farmers that got together and thought it was real easy to grow hemp and found out it wasn't. So the foundation of the company, like I say, is cultivation and processing. If you do that right and you do that cost effectively and you do it with standards, you'll be able to create a nice tabletop with a bunch of brands and brand portfolios and products that have strategic advantages. So I'll move on to processing. We have hired a couple of gentlemen, Scott Sliker and Dan Claycamp. They built Gincana, built and ran Elemental. They're very good at their business. They're I believe, ahead of the curve. A lot of experience. The objective in the processing, once again, is to do things at a higher standard. On the cultivation, we're applying for GACP. We've got USDA organic certification. We're FDA handling. On the processing side, we believe that we have to be a little ahead of the curve there, or see around the corner a bit. And traditionally in businesses, you'll see big beverage, big pharma, big tobacco, when they want to move into a space, and they will want to move into the space. They're making moves already. British American Tobacco is doing it. They will enact legislation to crush all the small players, which is raise the standards. So, for example, if British American Tobacco wanted to move into the space and there's a bunch of small players and they want to take market share, they would call their local politician possibly and enact legislation that the standards have to be at this level, which is very costly for small operators, and they would gain market share through that type of process. It's not new. It's been going on for years. So the objective on the processing side is to be ahead of that. We want to build a lab to FDA standards. The FDA met a year and a half ago with a lot of the industry heads and said, if you don't create your own standards, we will enter the market and create them. And none of the people in the industry have gotten together in the hemp industry and created that on the CBD side yet. So I believe that we have to be prepared for that. And our objective on the lab side is to do something unique and build a lab. It would be the first in North America that had FDA standards on the products. That does a number of things on the sales and distribution side. And you really want to take things from cultivation and be vertically integrated right to sales and distribution. For the reason, one is you obviously create some margins, and there's not just margins in one single part of this business that will be significant over time as we move into a more competitive environment. When this started, people were, selling pounds of flour for $500 to $1,000 a pound, and when a bunch of farmers came in and a bunch of product came in, well, that price went down. And also in a new market, the reason you want to be vertically integrated with the legs on your table, which I'm calling cultivation and processing, is you need to be able to pivot and de-risk your business. So by that I mean, CBD oil was the rage, and then all of a sudden everybody moved over to the market moved over to isolate and some distillates, and those people that weren't prepared for that, lost their businesses. So building a foundation of cultivation and processing at a very high standard and preparing for future standards not only de-risks your product, your company, but allows you to be able to pivot when you need to in this new market. And doing that at a high level also buys you an insurance policy when the bigger players come into the market, as they often do, and you're in a position to be a takeover target, or you'll at least survive and have a great line of products. Rolex and Rolls-Royce hasn't gone out of business for a number of years. So our objective is to do things at a very high standard. The experience in this industry is more important than a lot of other industries. There's not really a lot of textbooks or places you can go to learn this business. We've been at it a very long time. Knowing, scaling up is a challenge, and knowing how to identify hermaphrodites in the field and males, knowing when the plant turns, identifying when the hormones kick into the plant, and knowing that you can double the nutrients and cut them off to have the plant think that it's fall and all the nutrients rush to build bigger flowers. Things like that improve your yield. For example, you've got a plant that will do a 50-50 biomass and flower versus a plant that will do what everybody normally does, is about a 30 to 70% ratio. So you've got an improved yield and therefore improved profitability. So before I get into the third level of business, which is sales and distribution, I just want to describe the company, because we've got 30 minutes here on this particular call. We're a startup. My background is commercial real estate, and I've got a business degree, but I've been 30 years in the cultivation of the cannabis plant. So we've structured ourselves to win. When you look at people that are in this industry, they may have 300 million shares out, 400 million. Aurora, for example, had 1 billion shares out. Now, how do you create earnings per share out of that? How do you create value everybody that invests in this market is here to make money. So how do you make money? You keep your share count low. We've got just under 44 million shares out. 8 million of those are in our float. That's a nice tight structure. There's no pref shares, no toxic debt. You've got to preserve the integrity of that structure in order to create value and to have everybody make money. We haven't done a financing. I've invested in the company. Management has 4 or 5 million in cash in the company. Like I say, we've got a real estate asset. We're picking up another couple of pieces of real estate. Our objective is to build the balance sheet. Real estate is a great way to do it. Just to give you an example of the way we operate, we've got more coveralls than suits in our company. That particular farm, our first piece of real estate, we paid $4 million for it, put another $3-4 million into it, and the appraisal came in at $28 million 24 months later. We've got a couple other properties. We're going to do the same thing with that. So 44 million shares out, create balance sheet value, prove out revenue. If you earn 44 million shares, that's $1 a share on a 5 or 10% cap. You now have a $10 or $20 stock. So our target is to earn $1 a share. When anybody on the call that's got experience in the business can quickly take a calculator out and calculate even just 120 acres of our 824 and nothing indoor. Calculate 2,200 plants an acre, a pound a plant of flower. And USDA flower should sell first in this new market. A lot of farmers have dropped off. The normal rate for that is maybe 150 to 450. So on the low end, you can see that our target just at the farm, not the rest of the business that I'm going to get into, could possibly achieve that. So that's our target. We're in business to make money. This is, it's nice to be enamored with all the beautiful things that the plant provides. We're doing an environmental ESG report. We're also doing a Singer-Lee Walk evaluation on the company that will be out and published in the next couple of weeks. Should be fairly exciting for people to see that. And our objective is to create earnings per share and get to a NASDAQ listing and build the balance sheet and all of those wonderful things that everybody else does from here. So our structure is fairly simple. We've maintained the integrity of it. We haven't done a financing to date, and our objective is to create earnings per share, and be different. If you look at the top 40 companies in this sector right now, I think 2 of them, and under 8 cents or 2 cents, 2 out of 40 actually earn money. The rest lose money. And that worked, when people were enamored with this new industry, but people want earnings per share. People want to see companies making money. That's our feeling, and that's our objective. So we've got a great asset in the farm. It's a very largest USDA certified organic farm with 824 acres and 400,000 square feet of greenhouse. That's fine. Our processing facility that we've designed to get to an FDA registered facility it will have a larger throughput than any lab in North America. And the reason for that is we're splitting up the processing with the post-processing. Most people do that all in one facility, Mile High, Gincana, they'll have their messy bits, the big dusty work of the canisters going to crude oil, and then they'll build a lab inside of that same facility. What we're doing is we're doing all the messy bits out at the farm to crude oil, shipping the crude into the facility, and setting up our post-processing in a clean environment. That will allow us over the next 12 to 18 months to achieve a higher standard and ideally an FDA registration. What does that do? And why is that important? Because you make more money. There's 2 target markets that we're after. One is the pharma, nutraceutical, medical side of things. They're completely underserved, and people don't want to work at those standards. It takes more effort, but there's a lot of money in it. Pharmaceutical companies that do a drug, any type of study, and there's a lot of people trying to get into that right now, have to order the same product from the same farm through the life of the study. So if you've got a secure supply chain with product efficacy, which we do, the pharmaceutical industry is interested in you because they can now secure a supply chain. The average hemp farm in North America is 15 acres. The average USDA farm is 5 to 9 acres. So if Bob's growing 5 acres and the pharmaceutical company wants to do a 10-year study, they're not going to invest tens of millions of dollars unless they know they have a secure supply chain. There's also on the consumer or the pharma side of consumption or retail and wholesale. If you're a doctor, for example, and you go to prescribe this, or you can't prescribe this product because there's no standards. But if you have an FDA level product that's derived from a USDA organic farm, now a doctor can recommend this product without any risk to his license and legal exposure. So that medical nutraceutical pharma market, delivering at a higher level to them is lucrative for more reasons than I can explain in this short time period. The second market that is our target market is the consumer goods market, obviously. And it's like a a crowded swimming pool on a hot day. You need to differentiate yourself. The way we do that, again, is with product efficacy and standards. The better quality products will win the day. Consumers are becoming more educated in this sector, and they will demand higher standards. Right now you can buy some CBD oil and full spectrum oil, and it'll be different than the next brand you get. And it may not be contain what's on the label. And that's the problem with the industry. So if you set those standards very high, you'll differentiate yourself. If you have those accreditations and qualifications, and you can actually put them on the bottle at point of sale, you will have a strategic advantage and differentiate yourself from the balance of the market. So our objective is to build the foundation or the legs on the table, to do cultivation and processing to higher standards. And that provides our two target markets gives us a strategic advantage in those two target markets, and differentiates ourselves definitely in the consumer side of things. So that's a nutshell on the kind of the business model. The divisions that we're working on as a mini conglomerate, we're kind of like a canopy, but we're building organically. We didn't get a check from Constellation, and some of the things that we're doing will differentiate ourselves completely. Most of our marketing program is just starting on the sales and distribution side, and it will be around educating the customer. For example, there's so many fallacies out there in the beverage division and consumer division. I mean, you don't want to put it under your tongue when you take CBD oil. You want to put it on your top lip. There's no salivary glands in your top lip, and you want that to be absorbed into your bloodstream. So that whole thing is a fallacy in the market. Your liver gets a hold of it, and 70-80% of it is out of your bloodstream. When Constellation did the deal with Canopy, they didn't know that most of that CBD sticks to the side of the bottle. So, there's ways from in our biotech division, as far as drug delivery and absorption, that will also give us an additional strategic advantage. We've been in this a long time. We know that when somebody tells you to put CBD oil or anything on your skin, it's useless if you haven't partnered it with a long chain triglyceride and nanoemulsified it. And a lot of people just don't know that. So those things will win the day. Building a better product, educating the marketplace, and they will become educated over time anyway. That's just the nature of a new market. We'll already be there and delivering that and be aligned with that. There's two ways to, just one more thing about our business model. There's two ways really to diversify and de-risk your business that are common. Vertical integration, obviously, which I just spoke about. Also, having a portfolio of brands and products is a way to de-risk in a new market. And we've got our entry points into medical, nutraceutical, pharma, obviously, which is our primary target because it's underserved. The smokables division, we just picked up $22 million worth of retail assets for about 5-10 cents on the dollar, and in the CBD smokes, and that's our model right now. It's a mixed market. We picked up Primordia for 10 cents on the dollar. Picked up the seed company Castilla Seeds for 5 cents on the dollar, and moved semi-loads of assets into our greenhouse assets into our greenhouses. That was a nice deal. So it's a great time for acquisitions. We're targeting a couple acquisitions in the medical, nutraceutical, pharma space. We picked up the $22 million worth of smokes. Keep in mind, we've only got 44 million shares out. We picked those up for pennies on the dollar, and they were a beautiful product. And we're just starting to sell those. That product was rag cut like cigarettes in the same Kentucky facility that does Marlboro cigarettes. They were gassed and sealed, so they've got good shelf life, and they don't rag cut means they cut it long like tobacco. Traditionally, the CBD cigarettes in the market right now are junk. They turn into shake and fall out the end of the filter. So that was a great acquisition, and we're on that path because of it being a mixed market right now. You can buy in the the commodity division that we're starting out in North Carolina, we're negotiating on assets like a hammer mill and seed separators and everything. $22 million in this one block, and we've offered 5 cents on the dollar for all the assets and its equipment that's like brand new. So it's a great time to look for these types of acquisitions. They're pennies on the dollar, some of them, and what you really need to do to be successful in this market is diversify on that top line, as I mentioned, and product divisions. So we've got a commodity division, we've got a real estate division. We're moving some assets in there to build the balance sheet for that eventual NASDAQ charge. We're negotiating on a beverage division that's for big beverage, smokable division. CBDsmokes.com is our new site for big tobacco, and then obviously we've got a True Life brand and a Dr. Direct brand we're working on for the medical nutraceutical pharmaceutical side, and we're looking for acquisitions in that space. So big pharma, big tobacco, and big beverage. Those are the three playgrounds you want to be in, and we're as I say, we're looking to prove out our revenue based on our cultivation and processing, and combine that with a strong balance sheet with some real estate. We've got 44 million shares out, so we should be able to create comfortably earnings per share, which is absent in this sector right now, to differentiate ourselves. And we're practical business people. It's like I say, more coveralls than suits. We haven't got a board we pay hundreds of thousands of dollars for. We want to create earnings. We want to run the company like it was your own company, and the only way to do that is keep the integrity of your structure together and keep your costs down. This business isn't a mystery. I've been doing it for 30, 40 years. It's about production costs. It's not about anything fanciful. It's just commonplace business, like you'd run any other business. There's nothing magical about it. But there's some tremendous opportunity, obviously, in doing it right. Our objective, like I say, is to create significant earnings per share, demonstrate that, have a strong balance sheet, and get to a higher listing and make a bigger play. I believe that some of the bigger players right now, or bigger companies in this industry, are dying slowly because of their production costs. If you're commonly growing high quality pharma grade product at 63 to 65 cents a gram, and those other companies are losing money growing at $2 a gram, and they've got brands like Tokyo Lounge that really isn't that good of an environment, and you're building other facilities that are a lot better because of your experience. They'll eventually fade. The shine is off the apple right now for running out and getting easy money. Investors want to see earnings, and they want to see real value, which is fundamentally what you'd want if you were running your own business. So there's a little bit of time left. Does anybody have any questions? Anybody on the call have questions?
Thank you, Ron. We do have some questions for you. Question from Gary Zwetchenbaum. He says, talk about your earnings. Your fiscal year runs from July 1st, 2021 to June 30th, 2022. Can you discuss your goals on revenue and earnings for this period? And when will you become profitable? And what percentage of your 43 million shares do you own?
Yeah. Okay. So, thanks, Gary, for the question. We took over the farm less than 24 months ago and took off our first, more or less, a test crop of about 120 acres last year. The objective was to make sure we learned the area from a cultivation standpoint. At the same time, we've advanced, like I say, on the processing side with hiring of Dan Claycamp and Scott Sliker, who built Gencana and Elemental and all of that. This year's crop is 120, and we're going to go to 240. We'll probably do a couple 100,000 pounds of flower. Flower should be comfortably priced this year at $150 minimum to $450. We're USDA organic certified, so we'll probably be on a good side of that, 150 to 450. That's easy information to Google. So that's our primary revenue. We're also launching an e-commerce site, Soul Valley Ranch, to sell product direct, and we're also doing a huge marketing campaign starting in November for a full line of finished products. The revenue, second level of revenue, rather than just straight up cultivation, would be created by that. If you go to a dispensary and you buy a gram of flour, it's either $5 to $10 smokable. There's 453 grams in a pound, so that's about $2,200 to $4,500 a pound that they sell that for retail. So when you're thinking of selling it from the farm, it doesn't make much sense when you're selling it for $150, $250 a pound. When all you have, it's pretty compelling to set up an e-commerce site and do some marketing and get $2,500 to $4,500 a pound. So our revenue this year will be based on making that move, based on what we cultivate at the farm, extended to retail. And our product, again, it's super quality. We know that anybody that runs stuff through a dryer doesn't know what they're doing. You'll see that all over the place. That's chlorophyll leaving the plant. That's a chemical reaction in the plant. You need to give that a few days, several days at 68 degrees and 50%. So we build, again, premium product. It should sell. It's USDA organic, should sell. So cultivation is a base number. Taking it right to retail and wholesale would add probably 50 to 100%, or quite a bit more if we're selling it in by the gram. Obviously, there's 44 million shares out, so you can do the math on what that looks like as far as earnings per share yourselves. There's also a number of companies that we've announced that we're taking over that have existing revenue. The Primordia that we took over has a client base that we're going back to and trying to build that out. There should be some revenue from that. Bohemian Beverage, I just finished a trip out there and we're working on that deal. They've got existing cash flow. But like I say, there's a lot going on, and with 44 million shares out instead of 300 million, the earnings per share should impress everybody, and by that date, Gary, that year-end date, and be a bit of an anomaly in this industry. Second part of your question, I own 22 million shares of the 44 million out personally, and I've invested cash, 3-4 million cash in the last 18 months into the company. We believe in what we're doing. So you've got management vested and a tight structure.
Seth Miley would like you to go over the math one more time. You said you have 824 acres, 150 to 450 per plant. So how many plants are there per acre, and how many indoor harvest and how many outdoor harvest are there per year? Yeah.
So Seth, people always ask us, well, why don't you grow 600 arable acres, 2 crops a year? So the math is ridiculous at 2,200 plants an acre and even $100 a pound. It's in the hundreds of millions, but you can't go out and do that because you'd still have to sell it all. So you really have to, the people that will survive in this industry will create their own brands to make sure that they've got an outlet for their product. You cannot grow more than you think you can sell. So we've started with a test crop. We plan to double every year. We do about 2,200 plants an acre, Seth. So our acreage was 120, then it'll be 240, then 360, then 480, then 600. That's what we're thinking outdoor. And at 2,200 plants an acre, and we get about, just say, a pound a plant. So what it sells for, smokables are 150 to 450, in my opinion. Some people will tell you higher, but I think that's going to be a good market. I think our biomass is probably what you'd call seconds, because it's chocked with flour because of our treatment of the plant prior to harvest. We amp up the nutrients and then cut them off, and the plant does this rush. So there's quite a bit less biomass than what would be normal for other cultivators. And that biomass would be used for cigarettes, CBD cigarettes mostly. I think that's going to be a great market. And what doesn't make the grade would all go to processing, which would create another stream of revenue. So, for instance, and I'm not saying this is our numbers, Seth, because we're not supposed to do that type of projection. It's against rules. But if you were doing put it this way, if you were doing 100 million in cultivation, if you processed it all, you'd make another 60 million margin. If you take it to wholesale, you'd make another 50% margin. And if you took it to retail, you'd make another 100% margin instead of 50. So that's the kind of model. And that's why you want to build it out. And that's why you want to create your own brands. And that's why you want to create higher standards, because those brands need to compete with other brands. In the consumer side of things, it's a swamp. It's huge competition. So you want high standards and better quality. On the pharmaceutical, nutraceutical, medical side, there's less people in it because nobody wants to work to those standards. And that's really a market that's quite lucrative.
Well, Ron, thank you so much. We are out of time, and we look forward to you coming back so we can get more information out of you. And we do have a bunch of questions for you that we'll send directly so you can answer on your own time. But thank you so much for your presentation.
Thanks, Anna. Appreciate it.
All right, everyone. We've got some more fantastic companies coming up, so stay with us. We're transitioning to our next presenter.